New to trading euro US dollar, I'm going to show you two strategies that you can use for this market. So first thing you want to open up is your euro US dollar chart. I've actually got 4 charts here. If I just go and maximize those 4 charts, you can see I've got the daily chart, the 4-hour time frame, the 1-hour time frame, and the 30-minute time frame. The reason why I've got these open like this is for a potential strategy that I'll show you in a moment. But the first strategy I'm going to go for is just looking at simple highs and lows in the markets. The markets turn from these high and low points, and they're really easy to spot. You know, if I told you to grab a pen and pause the video here and highlight the areas where you want to be a buyer and the seller of the market, you will often just point out to the areas where the market turns quite aggressively to the downside, and you'll be pointing out the areas where we see big moves. Now you may think, well, yeah, that's really obvious, and it is. That's the whole point of it. The point is you want to be looking at those obvious areas of support and resistance that allows you to look at opportunities on lower time frames. So what I particularly would do would be looking at your weekly and your daily time frames, and I'd be highlighting these major areas of support and resistance, and then when price gets into these areas, I'd be looking at opportunities from lower time frames. So let's take into the example here. We see this low that formed on the 8th of December 2023. When price approaches that level, it can give us an opportunity. Now I'm not saying it's going to go all the way up back into previous structure highs. I just want to see if there's anything here for me where buyers either defend that level, or sellers that have been selling into that point decide to take some profits, and it gives me an opportunity in the market when that kind of transaction happens. So I'm actually going to dive down into an hourly time frame, and I'm just going to move back on my chart, and what I'd like to look for trading patterns, including stuff like the double bottom pattern. And we can see the market rallied here, pull back into the previous lows. That is what I call the double bottom pattern, and I'd be looking to get long around that second bottom with a tight stop loss targeting the previous highs, or even just try and see how high I could get price to go into another area of resistance, which could be this area here where there's all these lows and highs being formed in the market. Now you can add a little bit more context around that. If you want to add, you can add a indicator to try and help you with that. You want to go down and have a little look at the oscillators. You want to come down to the relative strength index, or you can use other things as well, like the stochastic oscillator. So if I bring on the stochastic oscillator, I can see it says 1533. That's absolutely fine. You can see the levels there. I'm just going to click OK, and you can see this has formed here. Now what you're looking for essentially is divergence. Divergence is the difference between the indicator and price action. So I can see here that price has come back down into the previous low. It actually tries to make a lower low, but if we look at the indicator below, we can see that it's making a higher low. So that is bullish divergence. It's a divergence because the stochastic is telling us that price has made a higher low, but price physically has made a lower low. That is basically telling us that this move down into that low is not as strong as what is anticipated. So that gives us the idea then to go long in and around this area, trying to target previous highs in the market, and that's what I'd be looking to do on the way up. This allows us to have a relatively tight stop loss with a low risk, with a high reward return if it does pull off. So that's one way you can look at trading the markets, is by using the daily or weekly highs and lows, wait for price to come into those points, and then look for divergence. So again, if I just kind of highlight this one here where price comes up into those previous highs, let's just have a look on the hourly time frame. Was there any divergence? There might not be any divergence, and this is why you can use the stochastic to try and highlight divergence, or you can try and use it in a way where price is in an overbought condition. Now what I can see here, price comes up into our level. We then start to form a sort of consolidation that is reflected here on the RSI indicator, sorry, the stochastic indicator, and price then breaches to the downside. Now you could look at that and say, well, we don't really get any divergence there per se. The market is making lower highs, so is the stochastic, but you can look at it that price is in an overbought condition as well. Divergence is a lot better, but still, it's that area of resistance that formed on the daily chart. We come into the hourly time frame. What we need to look for are those market patterns. If I was just to zoom in here, what I'd be looking for here is price pushes away, which is good. We want to see that. Then I want to see price try and come back into those highs, which it does. Then I want to look to execute short. I want to put my stop loss above the high there, and you can see from a risk reward purpose there, that would be one risk. Then you can see we easily could get a 2-to-1 reward out of that as price tries to come and take out these swing lows through here. So that is one way I'd look at trading euro US dollar if you are a new trader. Highlight the higher time frame areas of support and resistance, and then go and look at the lower time frame entries. That will give you the opportunity to have a better risk reward ratio. The second way would be using multiple time frame analysis. So I can see here very similar to the first one in terms of highs and lows, but this is more to do with trend, and in particular I'm going to highlight the 4-hour time frame. So I'm actually going to turn this into a 4-hour chart, and I'm going to highlight the 30-minute time frame as well. So essentially what we want to be looking for here is for trend following opportunities on these particular time frames. So I want to be looking to see, does the 4-hour and the 30-minute time frame necessarily agree with each other? So here I'm going to apply some indicators. I'm going to go to the moving average. I'm going to pop the 50 moving average onto this chart. Let me just go to indicators list and go to properties. Sorry, let's go to indicators list and the properties. I just want to go to visualization. I'm just going to pop it on all time frames there, and then I'm going to grab that one, which is the 200 moving average. It's because I've already got them on the chart, so let's just open that up. So essentially all we're looking to do here from a trend perspective is highlight when the 50 and the 200 are in a trend. So I can see here at this point the 50 crosses below the 200 moving average and price starts to push to the downside. I want to be looking then at 30-minute crosses over for opportunities. So if we look at the sort of time where this crossed over, that was on the 22nd of January 2024. I'm going to go to the same date here on our 30-minute time frame, and I'm just going to expand this out, because what I'm going to do is just pop a line on here, and I'm going to go to that 22nd of January. And essentially what I'm going to be looking for is my averages to become clear, and then I'm going to be looking for opportunities. So here the averages are in a little bit of a mess, although we do get that kind of crossover there. We don't actually meet the criteria, because what I want to see price do is come within the bands here of the moving averages, come out of the bands. So I can see here the market is starting to trend lower. We break into the bands here, we close above them, we then break back below. There would be my entry, stop loss above the highs, and I'd be looking to try and trade this as low as possible. And again, look for the entries as price tries to cross that 30-minute average threshold in here. So a little bit of a different type of strategy in terms of you're looking at more trend opportunities at that point. It might work a little bit better on an hourly time frame as well, you know, coming down the time frames there. But essentially you want to try and line up the two time frames together. You got the H4 time frame with the crossover of the 50 and the 200. You're then looking at your hourly or your 30-minute time frame for the exact same, and then you're looking for the price to break through the averages. A little bit of a different one there, more for higher time frame traders. My favorite is the first one, looking at the higher time frame areas of support and resistance, waiting for price to come into those, and then looking to execute if we get some kind of chart pattern form. So thanks for watching the video. Hope you enjoyed it. If you did, subscribe to the channel, and I'll see you in the next video.